Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers, and as you can see on this headline here on Seeking Alpha, bearish sentiment surges to highest since post-financial crisis. So not a lot of confidence going on in stocks right now. Those who are bearish or think stocks will fall over the next 6 months jumped to 59% for the week that ended on April 27th. That is up from 43.9% from the week before. It's the highest level since 2009. So suffice to say, no matter where you go on social media, mainstream media, YouTube, it doesn't really matter. Very few people are excited about buying into the stock market. Most of them think that the stocks are going to continue to go down and there's absolutely no hope for the immediate future. And there's not a lot of this that I think is particularly surprising. I don't think this headline is particularly surprising. But one headline that did catch my attention over here is that Morgan Stanley issues list of 45 highest conviction stock picks. So that actually did open my eyes because, as we know, when you get into a negative trend on the stock market, things start to pile on top of each other and people just get more and more bearish, right? So when somebody comes out and says, hey, here's 45 high conviction stock picks, well, that's one that I definitely want to read, particularly as somebody, as a long-term investor who believes that we are in a good buying opportunity if you're looking at quality names. All right, so let's take a look at this full list of 45 conviction picks. By the way, if you are interested in learning more about Seeking Alpha, my affiliate link is in the description, gives you 50% off your first year. Definitely a great service, check it out. Now, as far as these picks go, just to qualify the list here, list of comprehensive top analyst picks for North America by sector, with stocks showing a median upside of 32% compared to analysts' base bear targets. So these are picks that analysts have coming in 32% above the bear case scenario, which is obviously the most prominent scenario you see out on the media right now. So starting with communication services, we have Comcast, upside to price target of 31.3% from Morgan Stanley. Warner Music Group, 60% upside to price target. Then you've got Match Group, which is an online dating platform, 112% upside to the bear case scenario. Next, you have T-Mobile, which is very interesting because you would figure, I guess, with recession fears, bearish sentiment, maybe you would figure that cell phone sales would go down in an environment like this. I certainly would suspect that. But you actually have a stock here that analysts have 16.5% up from the bear case scenario. Consumer discretionary. This is definitely a target of mine during this recession fears. Obviously, people think that consumer spending is going to go down. I think that with the COVID opening, you're going to see more consumer spending than anticipated. Some groups, like e-commerce, we might see some weakness. But overall, as we trend into summer, I expect a boom in consumer spending. So let's see how it works out. And the first stock on the board here is Ferrari. And yes, Ferrari makes cars, okay? But they also have an entire luxury line of things like sunglasses, keychains, leather coats, all that stuff. So Ferrari coming in at plus 64%. Then you have Amazon. So a lot of people giving up on Amazon stock. Understandably, it's been treading water. Just hard to imagine over the next, call it 3 to 5 years, probably just the next 2 years. Hard to imagine a scenario where Amazon.com and their cloud AWS service, I can't imagine that they're going to make less money in the future than they're making now, right? So Morgan Stanley has plus 43% on Amazon. Then you have Chipotle, plus 25%. Ross Stores, discount retailer, always popular in times of recession and also popular in times of consumer discretionary boosts. I own TJX, which is TJ Maxx. It's a competitor of theirs, but I expect similar good news on their front. But Ross coming in at 31.6. Then we have DraftKings. This is the stock that I own. DraftKings, which has taken an absolute beating, plus 111% from the bear case. We forecast legal U.S. betting and iGaming to increase from $1.5 billion in 2019 to $21 billion in 2025. Very aggressive numbers there. All good news for me, but I am underwater in DraftKings as of now. Consumer staples, Constellation Brands, plus 18%, P&G, plus 9%, and then Hostess making a comeback after, I think it went through bankruptcy and was actually acquired, but plus 7% there. All right, on the energy side, we got Valero, plus 23%. We are broadly constructive on the refining cycle, and VLO is the most pure play large cap within the group. So I know energy is getting a lot of attention right now, and you might be thinking, hey, is there any juice left to squeeze out of that one? I don't get into energy stocks very much, but if you're looking through them for yourself, perhaps Valero is one to look at, as well as Suncor Energy, plus 30% upside. Obviously a renewables play, and then Energy Transfer plus 35%. All right, let's scroll down to financials. Financials is another place that a lot of people are deciding to put their money, not only because most of these stocks are dividend players, but typically with interest rates going up, you can make the argument that financial institutions will make more money per each loan that they issue. You also get into credit card debt, stuff like that. Wells Fargo, plus 44% from the bear case in terms of Morgan Stanley's opinion. Raymond James, plus 32. Charles Schwab, 75%. Equitable Holdings, plus 55%. And then rounding out the top ones, S&P Global, plus 20%. How about healthcare? We don't talk about healthcare very much on this channel. But here's the top names in Morgan Stanley's opinion. Abbott Labs, plus 25%. Baxter International, plus 44%. Zoetis, if I'm saying that right, plus 46%. Ultragenyx Pharma, plus 56%. CVS, interesting pick because a lot of people will say CVS, maybe their store traffic's down. Without, the boosters being in as much demand. They do call out on CVS. We envision CVS as having a pivotal role in reshaping access to healthcare by leveraging existing real estate to create healthcare hubs. Okay. Natera, plus 177%. Thermo Fisher, plus 28%. And Eli Lilly, plus 27%. Industrials. You got WillScot, plus 29%, Eaton, plus 22%, Northrop Grumman, plus 17%, TDG, plus 27%, Maxar Technologies, plus 34%, Knight Swift, plus 70%, Southwest Airlines. A lot of people looking at the airlines as a potential bounce back candidate. Particularly with travel increasing as restrictions go down and the rise of airline travel, which I've covered in another video that we've seen here in 2022, in my opinion, bodes very well for consumer spending as well as credit card stocks such as Visa. But Southwest is getting a plus 44%, Driven Brands, and then Sunrun, 333% on Sunrun, which is a solar play. EV charging partnership with Ford could drive significantly higher margins, so that could be one to look at. Info/tech, Palo Alto Network, most known for cybersecurity, plus 37%. Accenture, which is more or less a consulting play in technology, 51%. Lam Research, semiconductors, plus 31. Look at Apple. People starting to question Apple at the top of the list as maybe a stock that comes down. I think it probably has more room to come down technically, but it's hard to bet against them with that huge share buyback as well as massive institutional investing. They've got plus 28, 29% or so on here. Longer term investments in augmented reality, payments, health, autos, and home can help sustain growth as Apple captures more of its users' time and wallet share. Then Salesforce absolutely destroyed here over the past year, plus 106%. All right, now how about materials? Corteva, plus 4.7%. Not a lot of materials / commodities, so be careful there. It's hard to tell if we've reached the top of the commodity boom, and they've had substantial run-up. So if you're just in that one for a short-term play, I am not in any commodities, but if you are, you do have to be leery about the trend down if inflation goes away, and that's really the bet on that one. Real estate, you got Realty Income, long-term dividend favorite stock of so many people, plus 7.2% still left in there. Then you got SBA Communications, which is a cell phone tower operator, plus 14%. Okay, so a lot of different names in there across a lot of different sectors. And the point of this whole thing is as you're reading the negative headlines, as we are looking ahead to the Fed meeting this week, and all the things that the bears want you to believe about the world beginning to spin backwards, there are still companies out there that are going to perform very well during this time period here in 2022. And if you start extending your timeline a little bit and stop worrying about making stock returns tomorrow, and start thinking about stock returns a year from now, 2 years from now, then in my opinion, there's a ton of great plays out there. And the ones we just looked at were Morgan Stanley's highest conviction picks. All right, guys, let me know which of the names on this list you find the most intriguing, or maybe you have your own list that you've put together. Feel free to share a couple names below. Thank you, as always, for watching. Please give the video a thumbs up. And don't forget to check out that special offer on Seeking Alpha Premium down in the description. Hope you're having a great day, and I'll see you on the next video.